Let's get to business now with Giles Beckford joining us from Wellington. Hey, this is a really interesting story, Giles. So Fonterra has decided to freeze the pay of senior staff. I mean, what level of earnings and what about bonus payments?
Well, anybody who's earning $100K or more, $100,000 a year or more, will have their pay frozen. That's if they're on an individual contract. Those who are on collective contracts are not affected. And anybody who's earning a bonus in that bracket as well will have it frozen for the next 12 months. Essentially, it's, we won't say it's a token gesture because it's not an inconsiderable amount of money for a big organisation like Fonterra. 6,000 people or more in the past year were earning 100K. So from that point of view, it's a reasonable sum. But the point being, of course, is that as it goes through the ructions, as it turns itself around, as it posts big losses, as it writes down the value of so many of its assets, and really as it starts to restructure and send people down the road, it needs to show willing at the top levels, and this is very much it. Interestingly, just tucked away in the statement that Miles Hurrell sent to staff today was a comment that there are more serious changes and tough work to be done. And I suggest that probably next week when Fonterra comes out with its annual result and also the results of the review of its business that it's doing, we'll see some more grim news and perhaps some more pain to be suffered by them. In the meantime, we'd have to say a lot of people will look at $100,000 a year and say they're doing quite nicely, thank you, aren't they? And from that point of view, I suspect that it's something that they'll get through not uncomfortably.
Let's go to the Kiwi dollar now, a bit battered, but you say there's a silver lining that's showing itself?
Exactly. I mean, everybody worries about, markets and numbers falling up and down. The fact is that in the past month, the New Zealand dollar's fallen about 5%. And of course, that makes imports more expensive. So we can expect to be ending up paying more for some of the Christmas presents that we're buying. But the reverse of that is that it means our exports are cheaper. We get more foreign dollars for the exports that we sell. So that's meant ANZ does a monthly look at the main commodity exports that we have, and they found that indeed the returns in the past month were boosted by 4% because of a softer New Zealand dollar. Compare that with a fractional increase in the actual prices that we got for those exports. So there's the silver lining. And at times as the ones that we're going through at the moment with lots of uncertainty and everybody saying we're going to hell in a handbasket, the fact that our trading position is still looking reasonably healthy and we're still getting reasonable market returns, if not prices, then we're earning a bit more because of a weaker dollar. You have to say that's a plus for the economy.
So speaking of that dollar, what was the money go round like on the market today?
It was a real money go around, of course. Brexit was one of the main influences. That sent the pound down the drain, and then there was a bit of a rebound. So at the moment, we can say that the Kiwi is trading 63.3 US cents, 93.5 Australian. Some growth numbers out of Australia. The Australian economy grew at the slowest pace in 10 years in the 3 months or in the year ended June. It's perhaps not quite so lucky country that they keep talking about. And on Brexit, 52.3. Looking at shares, we surged through 11,000 level on the top 50 index, up 54 points, about 0.5%. That's a record high. We've had 4 consecutive closes where we've had solid gains, and you have to say the share market's benefiting from people wondering, where do I put my money? It's a psychological number. We're bound to get a correction at some stage. But for all you people with KiwiSaver accounts, just be thankful that the share market's gained 25% so far this year.
Thanks, Giles. That's our business editor, Giles Beckford.